Welcome to this video. Jeff Bezos has sold more than 8.8 billion worth of Amazon stocks this year. Out of these, more than 2 billion worth of Amazon shares were sold recently. Also, Michael Burry, who is an expert in predicting bubbles, has been selling significantly way more than purchasing new stocks. And if that was not enough, since the pandemic began, Sir Richard Branson has sold more than 1 billion in Virgin Galactic shares. Most recently, he sold 300 million in stock in August and 150 million in April. Also, Elon Musk sold a total of 9.85 billion worth of Tesla stocks in the past 2 weeks. Therefore, if a person with such influence and credibility is selling the stocks of Tesla, we should try to understand his underlying motivation and the motivation of other billionaires whom I just mentioned and who are also offloading their stocks. So why are these billionaires offloading their stocks? This is an important question, and we will try to uncover the underlying reasons behind their strategic investment decisions. And this is the only way to get an edge in the market. I believe that diagnostic skills are critically important for investing with confidence, conviction, and clarity, and thus making the probability of success higher. Even billionaire investors like Chamath Palihapitiya get inspiration from other good investors. And this is the very reason he and other billionaire investors are at the top of their game. They see life as a growth-centric experience, and it means that it is very important for them to learn and keep up to date with the relevant information to avoid falling into the hype and keep the focus on the investing goals. This is what Chamath Palihapitiya said in one of his recent interviews.
We have the stock market at absolute all-time highs.
Ripping.
We have crypto at absolute all-time highs.
Ripping.
We have the art markets. I don't know if you guys saw Phillips and Christie's and Sotheby's this past week at absolute all-time highs.
Sold another Beeple for $25 million.
We have inflation at a 30-year high. We have 10-year break-evens at a 25-year high. We have, 1 point some odd trillion dollars that we just approved last week, and we're still horse trading on another $1.8 trillion of stimulus that we're going to put in. And so then you have, I think the most important thing, which is the two most important founders of our generation, the two smartest people who have really consistently won, Elon Musk and Jeff Bezos, have collectively sold more than $11 billion of their holdings this year alone. And if you can't take all of that and decide for yourself what's right for you and your family, you're doing yourself a disservice. I think it's important for me to never sort of be forced to tell folks whether I'm buying or selling, although I'm willing to do it in moments where I think it's important. But I think it's really important to understand the context. And so I think these folks that think derisively about individuals who are managing risk, I think it's really naive. And I think it creates a lot of missed opportunity for them as well. If the smartest people in the world are now selling their core holdings that they told you they would never sell, and you are not reconsidering your position on things, you're either much smarter than them, or you're being really, really reckless.
In my opinion, the current market bubble is a consequence of two phases that the market went through after the COVID-19 pandemic first broke out. In the first phase, a lightning-fast market crash occurred from 14th of February to 20th of March 2020. And then an astronomical uptrend followed that has taken the prices to unimaginable levels. After that, we will cover some important insights and look at the recent moves of Michael Burry, Elon Musk, Sir Richard Branson, and Jeff Bezos to gauge the current state of the market. So let's first have a look at the underlying causes of the first phase. The impact of the pandemic on the markets around the world has been catastrophic. The first wave of coronavirus halted the growth of economies across the globe. Resultant stagnation caused deterioration across many market segments, which ultimately adversely affected the prices of the stocks. So, of course, COVID-19 pandemic resulted in an upheaval in the markets. And in just 1 month, the S&P 500 went down from $3,380 to $2,300 in just 1 month. And this is one of the sharpest declines which S&P 500 has seen in its history. And now we will look at the second phase where the stocks saw astronomical increase in price. But first, kindly make sure to leave a like and a comment to bless the YouTube algorithm. Also, if you would like to watch more videos like this, kindly consider subscribing since I release videos on market news, stock analysis and personal finance each week. Your support will mean world to me. Thank you. So now let's diagnose the second phase. So once the things settled down and the virus was controlled after the first phase of breakouts, the markets rebounded and rallied enormously, which can be gauged from the fact that S&P 500 is up 100% since March 2020, which once again surprisingly is the sharpest increase in such a short time frame in the history of S&P 500. So how does this day and night scenario happen? Meaning from the first phase of very sharp decline to the second phase of astronomical price increase. So the underlying factors of this astronomical growth right after falling off the cliff were the substantial reduction of interest rates by central banks like the Federal Reserve. Also another factor was the initiation of quantitative easing, meaning the purchase of bonds for suppressing the interest rates to increase lending. Therefore the market saw an influx of liquidity due to low borrowing costs, and we saw the prices of stocks going higher and higher. And if that was not enough, the fiscal stimulus by the governments did the rest. In USA, the checks were sent to the accounts of consumers, and in the UK, we had the furlough scheme to support jobs. Due to lockdowns, the money couldn't be spent elsewhere, so it was injected into stock market by retail investors. And due to this injection of retail funds, an enormous bubble is currently formed in the markets. As Michael Burry recently stated, more speculation than the 1920s, more overvaluation than the 1990s, more economic strife than the 1970s. And I absolutely agree with Michael Burry, since the US stocks are overvalued indeed. This can be seen from the price of S&P 500, and if we look at its chart in the past 18 months, it looks parabolic. Michael Burry also warned about the rising inflation and emphasized on the important fact that the wages are not increasing as much as inflation, which means that the purchasing power of the people is going downhill. He stated American real wages, adjusted for inflation, are down 2.2% since the January 1st. Seems the only truly meaningful thing that is down this maniac year. Inflation is a massively regressive tax, never forget it. Therefore, the purchasing power of people has been squeezed by the rising inflation, and this means that they will now have less disposable income left for investing and save for retirement, since the rents and prices of basic amenities of life have gone up drastically. And don't take mine or Michael Burry's word for it. The US Consumer Price Index (CPI) was 6.2% in October, which is huge. And I can sense that the central banks would be forced to reverse economic stimulus much quicker than expected, and that will lead to a stock market crash. Before we proceed further and unlock other critical data and information, as you know that my goal on this channel is to help you in making your money work harder, smarter, and in long term. Therefore, if you have a savings account with a bank and you are earning just 0.5 or 1% interest, which is lower than the inflation rate, and this means that you are actually reducing your purchasing power, why not earn 9% interest on your hard-earned money and make your money work harder for you? And you don't even have to worry about the price volatility. Literally, without lifting a finger, you can earn good interest. You can achieve that on Blockify, which is a platform that I recommend. They are not sponsoring the video, but let me tell you, even on top of the great interest that you will be earning, you can also earn up to $250 when you sign up via my referral link, which I have mentioned in the description of the video. The Blockify platform is intuitive, it is very secure and easy to use. I will appreciate your support for the channel. It will help me and it will help you also. Let's win together. Now let's look at the portfolio of Michael Burry and see what he sold during the third quarter of 2021. So in the third quarter, he sold way more stocks as a percentage of his portfolio than he bought. And what does that mean? It means that he is cashing out and waiting for the opportunity to buy stocks at lower prices when the market crash happens. And Jeff Bezos, who is the CEO of Amazon, sold more than 300 billion worth of Amazon shares also. And this sale, which was made a few weeks back, brings his total cash out in 2020 to more than 10 billion US dollars so far. And same is the case of Sir Richard Branson. He has sold more than 800 million of shares in Virgin Galactic since the start of the COVID-19 crisis. And likewise, Tesla CEO Elon Musk's trust sold about 1.05 billion worth of Tesla shares recently. And it makes a total of 9.85 billion in stock offloaded in the past 2 weeks. And he is not the only one who offloaded Tesla stocks to such an extent. Current and former board members, including chairwoman Robin Denholm, Elon Musk's brother Kimball Musk, Ira Ehrenpreis, and Antonio Garcias, have offloaded hundreds of millions of dollars worth of Tesla shares since October 28, 2021, after Tesla's market cap surpassed 1 trillion US dollars. And I am not surprised to know that Kimball Musk, who is the brother of Elon Musk, sold his shares just before Elon Musk's Twitter poll regarding his motivation behind selling the Tesla stock. But the reality might be different. So I am sure that all these great entrepreneurs know something. They understand that a storm is brewing and the current market valuations are way too high. This is the time to take profits. As Warren Buffett said, be fearful when others are greedy. Be greedy when others are fearful. I hope that you liked the content in this video and let me know in the comments below. Do you think that stock market is in a bubble? If yes, what is your strategy for the bull market and the expected upcoming bear market? Also, I have mentioned a link to Blockify in the description below. And as I mentioned, if you sign up with my link, you can get up to 250 US dollars in free Bitcoin. And you can also earn 9% interest on stable coins, which is way higher than 0.5% or 1% interest, which a saving account in a bank will give you, which is way below the inflation rate. And this means that you are essentially losing your purchasing power. So let's take advantage of this opportunity. Thank you for watching my video and liking my content, and also for your support. Stay blessed, stay happy, and let's make money work harder, smarter, and in long term. I will see you in the next video.